Good afternoon. Thank you for being with us here in the room in Brussels, and thank you as well to people connected online. And we have almost 1,000 people connected, which is a big success. You know that today we have to organize things online. That is technology, that's a new world and a new economy. But nevertheless, it's always good to meet in person. And I'm happy to meet you again this afternoon here in Brussels. So we are with this. I'm sorry. I wish you a warm welcome to this ETAF conference with the title, Expecting the Safe Proposal, the Perspective of the Tax Profession. The two parts have some sense. Expecting because we are still expecting, and we will have to expect some more time. But anyway, the topic is on the table, and it is an opportunity for us, for the professionals, to give the perspective, I would say the expectation of the professionals themselves, of the tax profession. I take the opportunity for thanking and saluting the president of the Belgian profession, dear Bart. Thank you for being with us. I know you're very busy, but you find the time in your agenda for being here. Thank you. 1 year ago, we gathered in this room to discuss the future initiative of the European Commission to tackle the role of enablers. Do you remember? We were together. The enablers that facilitate tax evasion and aggressive tax planning. It was the very beginning of the Commission's reflection, but also of our own reflection. And since then, the things have evolved. The initiative now has a clear name. You know, SAFE, if you have heard about this name, what means securing the activity framework for enablers, SAFE. The Commission ran a public consultation from July to October 2022 to gather the views of stakeholders on several options, such as new diligence procedures, prohibition to design and market aggressive tax planning, an EU register, and the code of conduct. Public consultation to which, of course, ETAF has taken part. The Commission has now made up its mind between the different options, and the main components of the SAFE proposal have been publicly unveiled. As you know, the proposal was even tentatively scheduled for release on the 7th of June. Today is 28. But the Commission's agenda is in perpetual evolution, and the representation of the SAFE proposal has now been postponed to an unknown date. So now here we are, 1 year later, still expecting this SAFE proposal and eager to dig deeper into the subject and discover how the reflection of the European Commission has evolved over time. As tax professionals, it is our duty to stay ahead of the curve, to adapt, and to prepare ourselves for the change that lie ahead. Last June, Mr. Benjamin Angel, Director for Direct Taxation, Tax Coordination, Economic Analysis and Evaluation of the European Commission, at this very same place and seat, promised to target only the rotten apples, and not to overburden the whole profession with these new rules, what was one of our proposals. Unfortunately, due to an unforeseen event, he had, Benjamin Angel, to cancel his participation today to this conference. But this should not prevent us from exposing our expectations. So my question is, will the Commission deliver on this promise? And how could it define aggressive tax planning without interfering with the work of law-abiding tax advisors? That is our main purpose and our main target with this project. To discuss further the Commission's intention and continue the discussion we started 1 year ago, we have an incredible lineup of speakers today who will share with us their insights and expertise on this topic. So we will have the pleasure to welcome our good friend Paul Tang, member of the European Parliament, chair of the FISC subcommittee of the European Parliament, but also Manon François, a researcher at the EU Tax Observatory, and Andrea Raab, who is a board member of ETAF and vice president of international affairs of Moklás, our Hungarian member. And last but not least, our moderator, Elodie Leimer, journalist at TaxNote. But before we proceed with this panel discussion, let me invite you to come on stage the ETAF Head of Office, Michael Schick, who will make a keynote speech on the tax profession's expectations and set the scene for the discussion that will follow. Michael, the floor is yours.
Thank you very much, Philippe, in the first line for this introduction, and welcome again, all of you here. So, as Philippe mentioned, it is now exactly 1.5 years that we first heard about the SAFE proposal. It showed that we were in the very first line to know about it. So it's going to be an interesting afternoon talking about the SAFE proposal. Before I enter into some details and some information we have at hand of the SAFE proposals, let me shortly address it in a broader context. What is the background of the proposal, and what are the intentions the Commission what are the objectives the Commission is intending with it? In principle, this proposal of SAFE is yet another response to an international phenomenon which is going far beyond the EU and which is often referred to as aggressive tax planning. That's what we're talking about. And let me say, from our point of view and a very general point of view, but which is also a fact, on a very general note, we are talking about, in principle, legal constructions, but which are often perceived as to be somehow indecent because they admittedly are a clever exploitation of international tax law system and international tax rules. Now, many measures have been released in the past years, much has been done, and now the European Commission tries to target tax professionals. In the discussion, in the consultation, and in the proposal, if it will come, often referred to as tax intermediaries, or sometimes, for us a bit worse, as enablers of aggressive tax planning. So what are we exactly talking about? According to information which has been mostly public and which we know, I can say that if the proposal comes, we expect it's more or less 4 or 5 points, 4 or 5 core points we expect. We expect a general prohibition of so-called aggressive tax planning activities and a general prohibition to establish aggressive tax planning schemes. What the scope is concerned, and here this is a step into the right direction because we asked for it. What the scope is concerned, we know that these aggressive tax planning structures shall always have a link to a non-EU country. So only national or only intra-EU tax structures shall, according to our information, not be in the scope, according to the current situation. And then, of course, you might ask yourself the question, this will imply that we need, or if the proposal comes, we would need a definition of what is aggressive tax planning. This will be very difficult. As far as we know, it shall consist of ex ante and ex post components. and the Commission announced that it shall be a very clear and workable definition. So we will see what we can expect there. Thirdly, there shall be, also this is already widely known, there shall be a register, a so-called EU register for tax professionals. So the scope would be the same. It would be for EU tax professionals who want to provide tax advice in liaison with non-EU countries. So the scope shall be corresponding. And then, lastly, there shall be a wide range of sanctions. If you establish a forbidden aggressive tax planning schemes and so on. And these sanctions shall be on the intermediary as well as on the client. And there is a wide range of sanctions, as far as we are informed, ranging from a simple fine until a possible removal of the intermediary from the list, with also consequences. Now, some ETAF points on that. As you know, ETAF is the Federation of Regulated Tax Professionals who are working under a strong professional law which requires them legally to give tax advice under full tax compliance and which ensures that the tax professionals are highly qualified and trained to provide accurate tax advice. Therefore, we think that we cannot put in Europe all the tax advisors in the same basket. For us, in those countries where the profession is highly regulated, all the players involved, so the intermediary, the company, and the states, they are already safe. So we think we don't need this proposal in those countries. So, and that, of course, the European Commission tries to find solutions for all the 27 member states, we understand, but we find that this has to be seen. And this is also, now, of course, I'm in favor, we are in favor of a strong professional law because we are the federation of it, because it's also in the interest of the member states, because regulated tax advisors play an indispensable role also in the flow of taxes for the member states. So instead of adding more and more bureaucratic burden to these professionals who are already regulated, we would recommend the European Commission to target the non-regulated tax advisors who are operating outside any binding professional law framework. So, and that's also why we have asked the European Commission to exclude regulated tax professionals from the scope of an upcoming SAFE directive, and to strictly limit the material scope to complex structures in non-EU countries in order to tackle the problem where it in fact is. And the second demand of us, as far as we know, has been fulfilled. Lastly, short comments on the points of the directive I mentioned. First of all, a definition of aggressive tax planning. What we would oppose is that we would be against a definition which would include, let me call it, classical tax planning. Because classical tax planning is an everyday business of a tax advisor and is also an economic necessity for many companies. So we would reject a proposal which would include classical tax planning. And secondly, from the perspective of a tax practitioner, such a definition, this is absolute key. Such a definition has to be clear and practical. For a professional who is working with the tax law every day, Legal certainty is key. A tax advisor has to know what is allowed and what not. Otherwise, he will always be in a gray zone and with one foot in jail, so to say. So this is absolutely crucial. And maybe one remark also to this EU register I mentioned. Now, first of all, in these countries I mentioned before, who are members of ETAF, we already have registers, and we have a concern that this might lead to a leveling down if we have an EU register on top of that, and above and furthermore, this could be a kind of a carte blanche for non-regulated tax professionals to go into the market or to legitimate themselves as registered tax advisors, while in reality and in fact they are not. So, as a conclusion, and then I give the floor to the honored and estimated panelists. In a conclusion, from our point of view, there can be a lot to be done more on the international tax levels, and if there are loopholes, and even if there are undesired loopholes who have to be closed in international tax regimes, then in principle it is up to the member states to solve this problem. And from our point of view, these, let me call it, shortcomings in the alignment of the international tax structures should not be passed on to tax professionals who are working who are working for tax compliance and who are helping the companies to pay their fair share of taxes. So from our point of view, more can be done on that level. For example, coordination of national anti-abuse rules, better coordination of tax loss avoiding, conflict of allocation, better coordination in that, or for example, to do common tax audits. So that was my not introductory, but keynote remarks. And now, welcome with me on the panel. Again, Philippe said it already. Manon François, she's a researcher on at the EU Tax Observatory. Welcome, bienvenue. And Andrea Rapp, registered tax expert in Hungary and member of the ETAF board, and Paul Tang, MEP and chair of the FISC committee in the European Parliament, and Elodie Lamère, who is moderating. Thank you very much.
Thank you. Hi, everyone. Thank you for being here. I'm going to be really short because I want to let enough time for the discussion. We will have first introductory remarks by our panelists, and then we'll kick off the discussion. So, Paul Tang, may I give you the floor for introductory remarks? Yeah. Can you take that one?
Let me start by saying it's a pleasure to be here. I distinctly remember my first introduction to ETAF, because that's the moment I realized that I come from a country with a very so-called liberal regime where we have no regulation except self-regulation, which was intended to prevent regulation. So I realized then that you can have a different way of organizing the profession of tax advice, and also realized how important that can be for the way the process of taxation is done, because I see the tax advisors in between the private sector and the public sector. It's a bridge between. Whereas coming from the Netherlands, I was very used to sort of approach by the tax advisors who are here for the clients, and for the clients only, almost a libertarian approach, where taxes are seen as theft. So that just as a way to the reason why I'm a pleasure to be here, because I think. Is the mic okay or not? Maybe this is better.
I don't know what they give us. I think it's just to be able to...
Okay.
Sorry.
Now, So I very much support the idea of the SAFE proposal. I think regulation is a way forward for the tax profession, right? For the profession of tax advisor, because we need to aim not at the tax advisor that does his job well and from a day-to-day business works with tax law, which is very welcome, but we need to focus on the bad apples and how to do that. But that starts with a form of regulation and registering. Now, Michael already said what are the elements of that plan. I can just ask you for some sympathy for the Commission, because it's trying to, I think it's a good step forward, just as the Commission tried to focus on a vehicle of tax avoidance, which is the Unshell Directive, which is now stuck in Council, which we try to unstuck. And at the same time, the Commission tries to push also at the regulating of the profession of tax advisor. This is welcome, but a very difficult job, because heterogeneity across Europe is huge. And especially the liberal regimes are in those countries that the European Parliament is happy to call tax havens, like the Netherlands and Ireland and Luxembourg. I experienced in Luxembourg and Ireland, they are still not used to that. They're getting used to that in the Netherlands by now. So we can expect also fierce resistance from that corner. Just as the reason that the Unshell Directive, which is now stuck, in fact, it's promoted now by 2 countries, Denmark and, of all countries, the Netherlands, which shows it. The Netherlands is really changing, at least in spirit. But we need broader support for that. And we need to make sure that the resistance is, and this is the difficult job the Commission has. So the fact that they take time, yeah, okay. I may be impatient, you may be impatient, but the fact that they take time is not just this, it's technical difficulty in a heterogeneous Europe, with especially when you're trying to define what is tax avoidance and what is not, how to do that. That's a difficult job in itself, but also trying to find the political support for it. So in that sense, it's a proposal that I very much welcome, but it also needs to be carefully introduced to really stand a chance, because the Commission can introduce it, but we really want to finish it as well. Just as a way of introduction.
Thank you. Thank you. Can you hear me? I have this. Andrea, can you go ahead? I don't know if...
Yes, thank you very much. And I'm very happy that I can share the thoughts of ETAF, and I would like to join what we could hear already from Philip and Michael in connection of the possible content of this directive, because the situation is that we don't know much about the concrete details, and it would have been much easier to know it. And we were starting from the title of this proposal to tackle the role of enablers that facilitate tax evasion and aggressive tax planning in the European Union. In our position paper, we already highlighted these elements, but first of all, what we could hear from Paul, I agree completely that it's very good that the mindset is changing and it goes to the good direction. But our thoughts, nevertheless, respecting that and knowing that harmful tax evasion and dubious aggressive tax planning causes huge tax losses for the states, for the European member states. And I think this is critical for the taxpayers. And I think this shouldn't be forgotten. On the other side, that, as we could hear, we should focus on a targeted segment of the profession, which means that the directive should be a focused one. And we think that the regulated professions, what ETAF represents, is really protecting the interest of the clients and indirectly the consumers, which means that they are the preventers of the tax evasion, not the enablers. That's why we think that those focused groups should be in the line of the directive who enables the tax evasion. On the third line, the tax evasion, it's very important to give a clear definition of aggressive tax planning. And just a thought, when we will get into more details, last year it was not mentioned aggressive tax planning, but abusing abusive tax avoidance. So it's interesting, but it shows that we have to be very careful and make the right distinction between tax evasion and aggressive tax planning, so which still is legal and which is already illegal. So that's why the definition is very important. And when we get into details, I can add. The EU register, when we get into more details, we also want to make it clearly that the register should be also focused on the non-regulated European tax professionals and third country tax intermediaries. And I would like at the beginning highlight, Elodie, just a very important message, I think, which is important. Not over-regulation, but better, more efficient regulation is needed. And that's one of the key points, because there are so many legislations. It's just an overburden also for the professionals and also the taxpayers. We simply should really think these through, so the measurements, how to solve them, and to make the legislation clear, understandable, and closing the loopholes, because everything starts at the legislative part. And that's why it should be really rethought. And last but not least, what we could also hear, and we will get into the possible solutions, we shouldn't forget the information exchanges between the countries. And we should try to analyze how they work or make them more efficiently, and also think about the tax administrations. The better, more efficient cooperations between them, the audits they carry out, so we can also look at as well from this side. And last but not least, which I think is one of our core message, we think a professional regulation, the minimum standards, EU-wide harmonized professional law, even with the minimum standards, is even better than to focus in a general approach. That's what we think at this point.
Thank you. So I will speak more in the name of what the data and what research has told us as of now about what's going on relative to what we call aggressive tax planning, or at least what we hope to call it, right? So what we see is that there are often three main actors that we always find in this type of tax avoidance schemes or very aggressive schemes. We have tax havens, we have some opacity, and we have enablers. We'll have to discuss about what we call enablers, but we have all of the three actors, and we have to deal with all of those three. So we have list of tax havens, as flawed as they are, but they exist. That was the first step to try to tackle this channel. Then we have 7, soon to be 8 DAC, and so that was also a way to tackle the opacity through the increase of exchange of information between member states. We also need to tackle enablers and the result of some of the practices, which are shell companies, and here we come in on shell and safe. It's a good step forward, and we all expect a lot from these two directives. So there's DAC 6 already. So intermediaries already have to report what they need, what types of schemes can be used to do aggressive tax planning, but it's not enough. It's flawed, we all know it, and there's no sanctions. So there's no true regulation, and we still observe a lot of practices that cannot be defended as not being aggressive and not be done just for the sake of reducing the tax burden. So what we expect, we all support, in I think, at least from the tax observatory, but in a lot of people in the academics background, we support SAFE in the sense that it would help have a more consistent framework for enablers, even though since we don't have the proper measures of the proposal, we still lack some evidence to make sure that it's going to be enough. I may not know everything about tax advisors, so I hope I won't say any wrong things about it. But we do observe a big role for tax advisors, and so we think a regulation can be very useful. But the main thing I think is to have a clear and robust definition of aggressive tax planning. What is in scope? And how do we define it? I think we don't all have the same view, so I think the discussion is going to be very interesting.
Thank you. Is it working? Because I can't hear my... Yeah, okay, great. Yeah, the definition of aggressive tax planning that you just mentioned, I actually checked, and in 2012, the Commission actually came up with the first definition of aggressive tax planning. It was in a recommendation back then from Shemeta, and it was about taking advantage of technicalities of a tax system or mismatches between two or more tax systems for the purpose of reducing tax liability. So that was the definition back then. I want to turn to Paul Tang because last week you were in the UK for a mission of the FIS committee, and I think you learned a bit notably about how they are regulating tax intermediaries and also the definition they should have of aggressive tax planning.
Well, I'm not sure that learning is a big word. What I find revealing is that they are struggling the same as in continental Europe with how to regulate the enablers, so to say. So I think they run into the same difficulties as we do. You say we need to define tax avoidance, but let's face it, it's sometimes a gray area, right? So let me be clear on what I expect from this type of legislation. It's not just that we need to have a disciplinary mechanism to make sure that you differentiate the wheat from the chaff to get after the rotten apples, right? But what I also very much hope that what this legislation will do, that it will lead to a discussion within the organization of the tax advisors. You all have a code of conduct. But do you have discussions on that internally, on what is done and what is not done? Yeah, I hope so. But this is how it should work. It's exactly how it should work. And this legislation will only help to enshrine this, because now it's not just for all the regulated, but also for the unregulated part, and also make sure that the discussion gets the internal discussion gets a stronger basis, because it's not always clear from the outset what is aggressive and what is not aggressive, what is harmful and what is not harmful. That's worth a discussion. So I expect, so yes, you need the external disciplinary mechanisms that comes with regulation, but you also very much need the internal discussion, and that will work in itself. We have also developed that. My political career started with a financial crisis, you could say. Ever since, you have seen initiatives in the banking sector to introducing an oath, a code of conduct, and so on, and that also helped to develop discussions within the banking sector. Can't say they're yet for all clarity, but it helps to have the discussions within the organization that are very much needed.
Just to be precise.
Can I add what I thought was interesting? One of the interesting elements in the discussion, I thought, was we had a chat with Dame Margaret Hodge. And she's a member of the House of Lords. And they were discussing a bill on economic crime. And there was a cross-partisan amendment, so backed both by Tory and by Labour members, to say that the failure to prevent an economic crime is also an economic crime. I thought it was pretty interesting what they did there. So that was the one thing that I thought, well, that's worth thinking about in the European context as well. If you try to ignore what you see, that is a crime also.
Thank you. So just to be precise, and I'm a bit worried because the UK mission is there, so I'm hoping I won't misquote their definition of tax avoidance. So basically what I read on the government website is that tax avoidance involves bending the rules of the tax system to try to gain a tax advantage that Parliament never intended. And I think that this whole notion of the Parliament never intended is something that is scary for tax advisors. Maybe, Andrea, this is where you can talk a bit more about the definition.
Can be, but I would like to go a little bit back to this definition. First of all, that we are talking about United Kingdom, an Anglo-Saxon legal regulation. We are a continental, following a continental regulation. So I would make a differentiation on that. So merit those that can be useful for us. But I think the scope of the definition is different. What the SAFE is actually focusing on, as much as I know. The direction is good to prevent the enablers, but we can only go back that we have to focus on the enablers who really made it possible to have tax losses of the states. So we should really pose the question that how it could be created, and try to focus on that part. So the professionals, the tax advisors, who really follow a very strict code of conduct, very strict rules, regulations, they are already on the good side, let's say like that. So those who make it able, this tax evasion, are those who are not really regulated. And that's why we think that the Commission should make a targeted solution, because if they make a general approach, then maybe the effect will be much less than if they could make it in a targeted way. And just an addition, you mentioned this EU recommendation, concretely the European Commission recommendation. In point 4.2, they use the word artificial arrangements, and there is this economic substance, so which don't create economic substance, which is actually in the Unshell Directive as well. And they give, they list what belong to these economic substance indicators. Maybe this is a good basis, and we say that it's maybe better to have a list of arrangements, tax arrangements, to be defined, which might be as an aggressive tax planning. It's much easier to say, because a definition, it should be very, very clear.
But that's what done in DAC 6, no?
Not totally. DAC 6 is a reporting, and here is a registration. This is a different. And I don't want to get into the tax secrecy, but it's important who reports the DAC 6, either the professionals or the taxpayer, if the tax secrecy comes into line. So I think it's not totally the same. But I think it's crucial to have the good definition.
Okay, I'll have a question on the scope for you, but I'll first give the floor to Manon to tell us what you think a robust definition should look like of aggressive tax planning.
So this aggressive tax planning is which is usually legal, is this gray zone between what's a normal tax planning activity is and this tax evasion. But it's in the middle. You're playing with exactly what you said about the UK, about rules that were not intended were not intended initially to help company avoid paying taxes at all or things like that. But it's just rules, and you have people that are able to use the different loopholes and mismatches between different countries to give an advantage to some companies. Well, I think if a practice is made mainly in the purpose of avoiding taxes, then it's sort of aggressive tax planning. Schemes that have no substance and which are targeted by Unshell should also be considered as aggressive tax planning. What we see is that, for example, we have thousands and thousands of companies in the same street, for example, and there are no employees. You just have a building there. Why is that? I mean, you cannot say that it's for a pure economic activity. You did it because you have an incentive of locating some profits. You have an incentive of locating some money into that company, even though you're not doing anything with it. This is aggressive tax planning. So I think Unshell and SAFE should work hand in hand to try to tackle that kind of things. But substance is a very important argument to define aggressive tax planning, and also the goal of using a specific scheme. Is it because your activity needs it, or is it because you just want to lower your taxes?
Just one point I would like to make about this, because I think the court and the for freedom also kind of restrain what we can do. I was trying to remember, because a few years ago there was this directive, which was not a tax directive, it was the cross-border merger and transfer of seats directive. I don't know if anyone is familiar with it, but it was about, actually, it sounds awful, but when you look into it, it's about abusive relocation for tax purpose or for social purposes. And their member states were quite constrained because there was a court case in Poland called Polbud. And actually, in this case, it was a company that wanted to go to Luxembourg for, better tax and social reasons. And the court established that having its registered office of real head office of a company in a country just to enjoy the benefit of a more favorable legislation is not tax abuse. So the artificial arrangement, I guess, here is really key. Anyway, that was just something I wanted to say. Andrea, I would like to come back to you because you said something about the scope, and I know also that last year when we were all here already, the Commission said it would target bad apples. Is, according to you, should the Commission only cover non-regulated tax intermediaries with this proposal? Is that the point you were making?
Yes, thank you. This is a very important point, and we think that the target should be on the non-regulated. I would say tax service providers. I wouldn't use the word tax professionals. So tax service providers, who are not regulated, and the third countries intermediaries. That's a tricky question, how to solve them, to put into the scope of a European directive. But obviously, there should be some ideas from the Commission. But I would say in a very simple way, to put the focus only on the non-regulated service providers, in that sense, intermediaries. Because, if you just think on it, the European countries, there is a high quality of regulations, sanctions, code of conducts, trainings, a lot of exams that the professionals carry out, then they are already on a regulated way. They will be sanctioned if such an activity is carried out. So probability this can be carried out only in such cases when there is a non-regulation. And that's why we think, and we fully understand that maybe this is a good way to approach, but a better approach is really to try to make a minimum, a compromise between the European countries, a minimum standard. And if we start from, not the maximum, but the minimum standards, where there is on the code of conduct, on the sanctions, on the regulations, and then it already would show a good ground for the European countries. And I think what is a very important message, we don't immediately have to over-regulate everything. And that's, I think, very important. Just regulate as much as needed, because then it will be efficient, but not over-regulate.
Still on the scope, maybe not between the distinction between regulated and non-regulated, but from the fisc perspective and from everything you've done on tax avoidance, is there any remarks that you can make on who not to forget in the scope of this proposal? And then I'll ask.
Yeah, I understand the wish of ETAF that you don't want to over-regulate, that you want the regulation to apply to those that are not regulated yet. I understand all that, but if you want to distinguish the wheat from the chaff, you need to regulate and register first, right? So that's how it starts. So I don't see how you can avoid it. You can have a lighter touch for countries that are already regulated, but even then, countries that are already regulated doesn't mean they don't have bad apples, right? So it's a bit like saying you are a member of the EU and you must you will uphold the rule of law. We all know that that's a discussion also within the European Union. So that's, I suppose, the same holds for tax professionals. You can't just assume because you are regulated there are no bad apples. So again, take the perspective of the European Commission. They need, what you want to do is to reach out to those, you want to reach those countries that do not have a regulation, I've already mentioned them, and to those parts that are currently unregulated. So in that sense, the aim is the same, and you very much hope for a lighter touch for countries that are already regulated. But you must come to a comprehensive scope to achieve what we want to achieve, is to remove the bad apples.
Sorry, you are right in that sense, but if we come from that direction, that some countries might think that the SAFE directive would provide them a good basis for a regulation, but this is not serving for that. The directive is not for the minimum regulation of the tax intermediaries, which anyway should be, but this is more about to set up an EU register, and they can either voluntary or some other ways register themselves, and everybody register themselves to provide tax advice in a third countries, which means that those professionals who already registered in their national country, they made very serious preconditions for registration. They have to make an extra one. And that's the problem, the real problem, what we could hear, that even if somebody is a non-regulated, so not registered nowhere, doesn't make any exams, no code of conduct, nothing, and simply putting on an EU register voluntary himself makes a market niche available, and there is a green light that you can provide the tax service. This is not that way. First, you should make...
I understand your point, but I don't think the regulation is intended just to have just registration. It's also a regulation, so there will be demands
that would be
connected to the registration. Otherwise, it doesn't. If it's just registration, yeah, well, we can do that, but that doesn't make sense, right? So that's not what the proposal of the Commission will be. So we need some form of registration to start regulation. That's the only point I make.
That's right. What you say. It's a very good news, but we don't know about this. We didn't hear about this, and that would be very ideal, and that would be a good way.
No, but this is a bit. But we have. I'm sorry. Now it's getting confused. We now have registration, but we had also discussion on what is tax avoidance or what is not. So then we talk about the regulating part. So that's not new. That's all about regulating, right? Am I sort of right?
So far, what we know about the, I would rather say the public consultation, but because that's what we know, the public consultation, nothing more. And from the public consultation, it targets a general approach, all the tax practitioners who provide tax advice in a third country by a European taxpayer. But this is a register for providing tax service. This is not a minimum regulation for tax professionals.
Yeah. What was said publicly is that there would be like some sort of whitelist, and if a company is registered and then the tax administration noticed that there's a loss of tax revenue from member states, then it can deregister the tax intermediary. And if an EU client chooses to go with a non-registered tax intermediary, then there can be a fine on the EU client. But so far, we don't know much more than that, Elodie, publicly at least.
You are right with this whitelist, but the whitelist is only the register to comprise everyone. So that's the tax burden, the tax obligation for the professionals that besides the national register, they have to register plus themselves. And that would be, I think, not the biggest part, but the biggest is that such people come to this whitelist who shouldn't be a white one.
But the point is, you need to register first before you can start to regulate. If you don't know, otherwise you will regulate a dentist. Or you need to identify who you want to regulate first. So that's just what registration is. And then it starts on how you can, and this is where the interesting part and what we have in common. You don't want to overburden the countries and the professionals that are already regulated. Then this is where the Commission needs to be clever, but it starts with registration to come to regulation. And that goes to delisting. Is then a possibility, for example, that is the disciplinary mechanism in there. But the real discussion is what are the quality standards that we link to this registration. In that sense, we agree, right? So this is we are still a bit in the dark. We know that the Commission is exploring what is tax avoidance and what is not, which is a difficult question. We all know that. So that's not. It's a difficult question for us. It's certainly a difficult question to put down in legal text. So this is where we are.
Yes, you are right in that sense. But just imagine, if we talk about the regulation of a profession, doesn't it mean much more than regulate only because of to achieve tax avoidance? Regulation is more. Regulation is about to give a quality standards for the profession in each member state to help the client's interests. And this is not primarily because of avoiding tax evasion.
Manon, can you say something about the scope? Thank you. So I think I agree with both of you. So to say that it's a minority of enablers, and I'm saying enablers in a broad sense, that is problematic. But some of them are very problematic. We've had some evidence recently about what happened with PricewaterhouseCoopers in Australia. We had some evidence with the Rothenberg files that we have some neighbors that have been here just to help some clients avoid taxes in legal and a little bit less legal ways. So for this one, we do need to tackle them, and this tax advising activity is highly concentrated. We have some companies that dominate the market, that have a big power both for a company and in advising governments. And so we need to tackle those activities that are, again, in this gray zone. Want to make this distinction between regulated just some or registering some of the tax professionals, then you create this incentives to shelter in one or the other category. So I agree with Paul Tang that the broader you make it initially, and then the easier it will be to start this regulation that I think at least is very necessary. Also, I think that the fact that we just want to focus on EU tax advisors is maybe not enough, because then you can also ask for services from outside of the EU, and then anyone that has any link to the EU. So I don't know the precise scope and if anything else has been published about this, but it's not only the European tax advisors that should be in scope, but anyone that may have any link to the EU. So outside, and I don't know if the EU can implement that legally, but it would be great to have the largest scopes possible, I think, so that we don't have incentive to go one way or the other. Andrea, you want to add something?
Yes, I would like to say that if there would be a higher quality regulation, even if it's a minimum one, then I'm sure that would be less tax avoidance, and then it would be much easier to go on. So our approach is starting with a quality regulation, because I don't know how much you know about the different EU countries, but there are countries, as we could hear, there is no regulations. There's a liberal service provision. But if you think about that, the interpretation of tax regulation is not an easy job, and to help the clients and to serve their best interest is a very crucial one. And for this, they should be also protected, and the client as well. And if it's not the case, then where is it leading to? Are we waiting much bigger tax losses of states?
Yeah, I was going to ask what alternative to SAFE, if any, but
For SAFE, there are quite many. First of all, a minimum harmonized a good regulation, and this should be rethought. What is the minimum standard? And the countries could really check. Maybe they choose a better one. And I'm sure that a lot of member states where there are associations or chambers or associations, they would be very much happy to have kind of a standard to help their activity. But for what we didn't reach is really this list of tax arrangements that could be determined as aggressive. I think this is also very crucial, but just posing the questions, where are the so-called these artificial arrangements coming to the list? From whom does this list will be added? Because I think it's not the invention of the European Commission. It should be coming from concrete cases or concrete. So, for example, if, let's say, there are the different tax administrations in the European member states, they have the different cases. And if it's a legally binding decision, for example, they can provide as a good basis for these artificial tax arrangements as well, which can be on the list. Because it's a great question or a good question that from where the list will come from.
But I mean, the DAC 6 hallmarks were indication of when a scheme is aggressive. So we already have that, no? Yeah, and still on that, because I asked for figures on the exchange on the reporting on DAC 6. So from the period 2018 to 2020, there were in the EU 32,000 reporting linked to DAC 6. In 2021, it was 15,000, and in 2022, only 2,000.
But you forget one thing. Even the professionals very hardly can recognize these hallmarks, and it's very difficult to determine based on these hallmarks which qualify as aggressive schemes. So that's why...
so DAC 6 is difficult to apply for the tax profession? Is that?
In some cases, yes, I can say, yes.
Paul Tang, what alternative SAFE, if any?
Do we need an alternative? Let's try to go forward and have this discussion. I think it's a good discussion anyway, and I see that you want to have a measured regulation, right? In the sense that it's sometimes light touch and sometimes heavy-handed, depending on the situation. That's the way forward, and we see that in more. I think it's more the direction of travel, because I also work on the AML package, where we really take a closer look at the non-financial sector, and also at the organizations that are the self-organizations for the sector, for example, for the notaries and or for real estate agents and so on. So I think it's part of a broader trend, and for me, so there's not directly an alternative way direction of travel, but it's of course we can discuss how it can be best be introduced and how it can be best enforced. So that's a much more interesting discussion for me. So
I just would like to say a few things about the legal basis, because in the open consultation there was the possibility that it would not be a tax file, so it would be open to co-decision. And then to find interesting point to say about that, I looked for the legal opinion of the Council in 2016, I think. It was on the public country-by-country reporting. So I don't know if you remember, but the Commission, it was FISMA. They came up with a review of the accounting directive. So they were like, it's not a tax file. Some member states were saying, well, since the underlying policy objective is the fight against tax avoidance and everything, it's a tax file. And the Council's lawyer were actually saying that it was a tax file. So, and the Parliament was saying no, it's not a tax file. So we had 2 against 1. And so what we can learn from this legal opinion of the Council back then, it was that the Commission should have justified that the protection of public interest would require the coordination of measure. And there, sorry, I'm not really clear. I'm reading my notes, but and basically the Council Legal Service said that the interests that require protection are those of treasuries and not the public. So you had to demonstrate that you had to protect the interest of the public to say it's not a tax file, it's not a tax file. So I thought that was interesting. I'm not sure the Commission will dare to come with a non-tax file, but would be good if the Parliament would be co-legislator. But if I understand, ETAF is quite scared that the Parliament would be co-legislator because you're scared they might be further, no? They might go further than the Commission, no?
No, I don't think we should be scared because the European Parliament can add very valuable thoughts, like in the Unshell Directive they did it, and I think this is very a useful one. In the Unshell Directive, they also put very valuable thoughts. So we will see how much from this will be in November or somewhere there accepted. But we are, how to say, we are more realistic. At the moment, there is no qualified majority voting, and in tax matters. And if we take this as a tax matter, which I think most probably this is the case, then there is a unanimity. And this is the Article 115.
Yeah. Yeah. So we've heard that the Commission is actually waiting for an agreement on Unshell before presenting SAFE. So one is linked to the other. And maybe I understand politically why they do that strategically, but Paul Tang, do you think it's a good idea to wait? I mean, we could negotiate both in parallel, right?
No, I'm a bit puzzled by this link. Maybe in the definition of tax avoidance, the Unshell Directive takes a prominent role. I'm not sure on that because I'm not sure what the legal work of the Commission entails. It could be a political link. Once you have run into resistance in the Council, you're not going to put on another file that runs into the same resistance. So that could be the reason. But yes, I would say that I would very much. I would very much hope it will come forward soon. You see the uncertainty in this room, so that's not. We were discussing this for long enough. Let's bring it forward. Then we have the real discussion, and not discussion of hypothesis of what we think it is or what we think it should be. But then again, I'm pretty sure that the Commission will come forward in the next half year, and we can start the discussion. But for me, the link with the Unshell is not obvious.
For you?
For us, neither. Okay. So Unshell could be adopted if it's adopted, and then come the SAFE maybe in a modified version.
Andrea, do you have an opinion on this?
No.
No?
Elodie, sorry, can I say some words still on the better the solution side, or
Sure.
closing
We still have 5 minutes before opening. 4 minutes before opening.
First of all, I think it's still very clear to say not to overburden the law-binding professionals. This is a clear statement from our side. The second one is closing the loopholes in the legislation, not to make possible tax evasion. That's the second, I think, which is very important, to provide the credibility for the professionals, for the intermediaries, because how can they work if they cannot count on the legislation? So it should be credibility in the system, and I think maybe it's not bad sometimes to stop a little bit and to evaluate the existing measures and see what other things could be better done from the existing regulations.
Yeah, but something I don't understand. When you say don't target the law-abiding profession. Yes. But I mean, tax avoidance is always legal. So you could say that tax intermediaries...
Now the target is when it's not legal. That's why the list of tax arrangement, the artificial ones, that's on the focus. Obviously, that's why it's important to make the clear distinction between the criminal and the non-criminal effect, yes.
Yeah, but the Commission is trying to target the gray zone, so not what is illegal, no?
Aggressive tax planning is somewhere between the two, but we should, I think, penalize when it is criminal but the tax planning shouldn't be banned, because this is one of the core service, I think. I don't know whether you want to say something.
Yes, I think so I agree. First, we should start looking at the loopholes and try to close them, because if tax advisors can use the loopholes, then if we don't have loopholes, they don't have much to use. But the issue is that I think some of the loopholes are being created, they're not intentional. Some countries, we know that they put in place some policies that aim to attract artificial activities and artificial profits, but some of them are just here, and it happens that they work very well with some other policy or rule in another country, and in the end, they're very favorable. Regarding the list of arrangements that we would need to know what is considered as aggressive tax planning, then it's a good question of who should report, because if it's tax administration, they usually don't even know exactly where to look. I mean, if for many, they have information, they have data, because now we have country-by-country reporting, we have the automatic exchange of information, but they don't necessarily have either the human resources or just the knowledge, because they're not tax practitioners and they don't work in-house for the companies, so it takes time for them to understand everything that's going on, and it's too late. If it's been going on for many years already, then it's too late, and then we'll find another way. We've closed the double Irish, we have the green jersey, we have the single malt, we have all of those new schemes that emerge anyways. So it's best if it's come from tax practitioners, but then there's this incentive of whether they really want to, what they want to disclose. So the hallmark and DAX 6 were first steps, but they're very broad, and I'm not so sure there are enough to really tackle every kind of scheme that has to be reported. And then we can use also the tax havens list. There is this big discussion on why there are no EU countries on it, why there are so few countries on it. We can create a better list using the newly available data and information to try to look at which countries seem to be host to the most artificial activities by multinational firms. So yes, I think that could be new ways that could be complementary to SAFE, because I think having this discussion about SAFE is very necessary.
Sorry, just a short remark, if I might. You said that the list of tax arrangements should be made by the tax professionals, by the regulated or the non-regulated ones?
Ideally, everyone.
Yeah. I must admit that one of the question marks that I have regarding to this proposal is actually how they're going to enforce this. It seems even related to third country intermediaries. Maybe Andrea, you want to say something about this?
Yes, because at the moment there is no real weapon in the hand of the Commission to enforce them on a third country. Even in the information exchange is difficult, but through the sanction side they can enforce it. That's the only option that they can at the moment.
Yeah,
but let's say if a register is voluntary, and if someone authorizes an intermediary to carry out a tax activity in advice in a third country, then we can also ask, it's a taxpayer who authorized. And what's the case when it's not the taxpayer, EU taxpayer, but the subsidiary of the EU taxpayer or the branch? Then it's already, the scope is out again.
One option would be to go directly through the multinational firms by demanding much more information on what they do. So country-by-country reporting is a first step, but it's definitely not enough. First of all, because you aggregate everything at the country level. So a lot of information is actually lost. We have so few variables, so it's very hard to really pin down what's going on. And we could have much more information because we know that you usually have very complex structures that are involved in those aggressive tax planning schemes, so that you kind of lose a lot of information because you don't know exactly what's going on where. So you have this opacity. And you could have more information on the structure of the firm, on the restructuring of the firm, on why you carry out such activity. And this information should be made easily accessible to tax authorities through also exchange of information, but also through third parties, for example, through research, so that we can have a better engagement with tax authorities to try to help them understand the different schemes and help really tackle those information. So going through the multinational firms, and I think enlarging the scope of country-by-country reporting would be a first way of going around this issue of incentivizing tax advisors that are actually here to serve the multinational firm to report on the schemes.
Just one thing that I learned visiting the UK was also that the role of the HMRC was discussed, and also the point was being made by the academic side of our counterparts was that the HMRC can play a role also in helping to identify tax advices that are dodgy and are not, except that the HMRC didn't have the incentive to do that. So they say they don't have the resources, they don't have the incentives, so they don't. So there are little cases brought forward by the tax administration in the UK. But it does mean that can play a role in there, right? So you were saying it needs to be the tax practitioners that come forward with the schemes. Well, don't forget about what the tax administration will learn from dealing with tax advice. I think they know you pretty well, actually. So don't underestimate the tax administration.
Okay, we have a few minutes for questions from the audience. If there's any, you can just raise your hand and please introduce yourself and maybe say to who the question is addressed. There's a few questions. I don't know which mic.
I would just throw a mic.
Hello, Anna Weber from the Austrian Chamber of Tax Advisors and Public Accountants. And I would like to come back to the point of the discussion, register versus regulation. So it reminded me the chicken and egg discussion. What does the Commission have in mind as minimum requirements to qualify for being registered on this so-called whitelist? For example, this Australian tax firm offering global tax services. So what would be the minimum requirements as regards qualification to be registered?
It's not there, so.
Yeah, well.
Basically, we don't know.
Yeah. We're waiting for the Commission.
Sorry. Basically, we don't know. That's why you saw the confusing in the debate and in the panel, right? So we would love to know.
But are there any thoughts going on in that direction, or do we have to discuss this with the Commission in more detail?
I think the point, at least I was making, that you need some form of registration to start regulation. And I think Andrea made a point that we want to have minimum standards and so on. So but this is really what's is still being cooked up by the Commission. So we can speculate about it more. Of course, we can do that, and we love to. But
and my second point is the ATP schemes that were mentioned also, that the list is being set up. This reminds me of more or less going into a case law system. And where's the rule of law? Because like in continental Europe, we don't have case law systems so far. That's what I would like to mention as regards this point. Thank you.
Thank you. I'm thinking that Gentiloni is in Econ right now. Maybe he's spilling all the beans behind our back.
Thank you. I'm Bart van Qualle from Belgium here, I'm president of the Institute of Tax Advisors and Accountants in Belgium. My question is about the rotten apples that you are talking about. And I totally agree. We need to put out the rotten apples in the tax advisor community in totally. I'm not talking about profession, I'm talking about community here. But we have organized in several countries in Europe our profession totally. And my question is, have you done a study in which you can prove that our profession, which is organized in Belgium and other countries, that rotten apples are not put out? Because I'm certain, certainly for Belgium, I can only speak for myself, but I have a lot of contacts with all the presidents and all the organizations in other countries. I can tell you that rotten apples are throwing out of our profession. The white list of our profession stays white. When we are informed by the tax administration, we do our job. So why there's no trust in our profession and in our organization of our profession, which is organized by law?
Anybody wants?
Did someone say you were not trusted, or
there
was some bit of
yes,
around sort of?
it is. Yes, it is, because you're not trusting. You're creating another whitelist with people who are not on the same basis legally, with all the obligation that you need to do. We have to, as a profession, we need to do the anti-money laundering. We need to do the obligation of studying 48 hours in a year in Belgium. We need to do this and this. A lot of obligation that we need to do as a profession. And now you're creating a whitelist on the other side who are giving the same opportunities. This is a missing link of competition, which is not good for the profession as a whole. Because the thing was missing in the whole of the discussion is that there is a relationship between the state, the finance organization of a country, and the tax advisors in a whole. And the other side, you have a client. And it's a triangle between those three, say, persons that we need to collaborate together. We have an obligation for the state, because when something is not in order, there will be a complaint, and we do the necessary things. It's organized by law, how we can put throughout somebody who's not in order. But on the other side, we have a relationship with our client, and clients who not inform their tax advisor have a problem in the relationship between clients and tax advisor. That is also organized by law and the own organization rules of our independence and so on. That is missing on the white list totally of Europe. When there is a white list there is no organization of control. In Belgium, the profession is controlled every 7 years if everything is in order. We look to the dossiers of the enterprise and the client, how it's working. And we are more looking to all other obligations and controlling all other obligations in the relationship client, in the relationship triangle, and giving more security to Europe than it's organized by Europe itself. Why doesn't Europe give confidence, putting all the institutes in Europe together and try to arrange it together, and not by organizing themselves a white list? And that's the confidence that is missing.
I'm not sure that is missing. I made it just simply the point, if you want to have a white list, you start with a list first before you make it white. That's all my...
No,
was a conceptual... No, there was a conceptual... Give me a moment. That was a conceptual remark. So you need some form of registration to get to regulation. That's all.
No,
so
Europe is...
I totally agree with you that...
Sorry.
Totally agree with you that to come to the white on the list, you need that regulation. You need the standards. I think we are in total agreement on that. I started out with a problem that the Commission has, that we now within Europe, we're in a very heterogeneous situation. And the basis is partly also the harmonization of the internal market. So the Commission need to come forward with a clever, cunning plan, not to touch you too much, but to bring forward the regulation in countries which have no regulation at all. I come from those countries, so that is the difficult task. So I think we agree in principle. It's a daunting task. Let's face that. And in that sense, bringing that together may not please everyone, but maybe we need a price to pay to make sure that now countries are regulated that are not regulated before. So that would be the major gain. If you look at, let's say, the industry of tax avoidance in Europe, it's located in some countries, right? So it's the Netherlands, it's Ireland, it's Luxembourg, it's Malta, it's Cyprus. Keep your eye on the ball. If we start to regulate there, we're doing a good job.
I have a second question, if I may. Is the secrecy of the profession that we have. Does lawyers need to be put on the list, the white list, the first question? And how do we go ahead or go on with the secrecy of a profession when in a country the secrecy of profession is perhaps mentioned not legally totally equal with the lawyers? How can you put two names on a list who doesn't have the same secrecy of profession at that moment?
I'm not. It's a good question. I'm not sure that I have a good answer. Maybe you do have.
No, I don't. Make the same secrecy of profession for the both profession, because they do give the same advice on the tax law for both of them. So why don't they give them in all the countries the same secrecy of profession when a lawyer gives tax advice to the client?
Can I have a
That's why I was asking earlier about the scope, who not to forget what kind of profession as well. But Andrea, you want to
remark that I wouldn't call it whitelist. This is a blacklist, totally blacklist. Because whitelist, if something is approved, blacklist when it's not, and that's why I'm saying that if you want to start with the register, as you mentioned, Paul, to regulate somehow, this is not starting with a list. I think if something is starting with a list, is not a good direction. This is a regulation, and this is a minimum standard, and that should be. But
Andrea, just help me. How do you start to identify the rotten apple if they are not registered first? That's the only conceptual point I make. So you can say we can target the rotten apple. How do you do that? It's not that they identify themselves. They raise their hands. Here, I'm a rotten apple. Pre-register me. So it's just how are you going to do it? Just please help me on this. Yeah, well, so it starts with listing and then try to make the distinction between black and white. That's how it works. You have done that. You have all done that. It works. Now we need to do it more at a European level. And it will be slower because I think you are ahead of the curve, right? Because you are already regulated. But my concern is if you look at the tax avoidance industry, it's in the particular countries. And this is where we need to aim.
There's one question in the back.
Yes.
Yeah,
Thank you.
That will be the last one.
Okay. I'm Franz Drgans. I'm coming from Slovenia. I'm a representative of Chamber of Tax Consultants of Slovenia. The subject of the future Safe Directive is key importance for Slovenian tax intermediaries and tax advisors, as we believe that the taxpayers need legal certainty in tax procedure. I'm aware of the position of the German Tax Advisory Chamber, which recommends that SAFE only regulate intermediaries from the third countries. I do not agree with this point of view, because we must know that there are countries within the EU that have virtually no regulation for tax intermediaries of tax or tax advisors. I must also say that we have to distinguish 4 countries: old democracy or with the regulators, new democracy with regulating profession, old democracy with no regulation, and new democracy with no regulation. And Slovenia is the 4th case. So I myself believe that the SAFE Directive must set minimum standards, which Germany will certainly meet, and as a result, the directive will not interfere with the regulation in Germany. But I hope, in countries that are not lucky enough to have the kind of regulation that Germany have. So the result in Slovenia is that we have 30,000 tax intermediaries who fill all tax returns for taxes and social contributions on behalf of 214,000 companies. As a result, it's not possible to audit or control the area of money laundering, and it is not possible to ensure equity before the law in connection with the grey economy, which we have approximately 22% of GDP. So, The situation in Slovenia does not allow for legal certainty or security for companies.
I'm sorry, but we're really running out of time, so can you please keep it?
Yes, yes, but it's very important to know that. So I strongly support position of ETAF, and we would like to that ETAF help us also to introduce regulation of professional tax advice profession. So first question. Shouldn't the SAFE directive clearly set out in the legal rules the requirement for member states to regulate the field in such a way that companies can receive a legal safe tax service plus to meet safe environment for client and the tax advisors? So shouldn't SAFE directive regulate tax profession? This is the key point of my question. Thank you.
First of all, I would like to react. Thank you, your comment and question. I think what you ask is not really related to this directive proposal, because I don't know whether you went into details of the title. The title is Tackle the Role of Enablers. It's not about to make a minimum regulation. That would be anyway our motive as well, to make a minimum standard of regulations that would help your country. But as what we and I was saying and representing as well, that this would be a highly need for a professional minimum standards. But at this point, which anyway we don't know in details, but this is focusing on the enablers and to set up a register for themselves. So if there is a register for a country, in your case, it doesn't help the regulation. That's why the
question is why SAFE directive do not like to regulate professionals.
That's a good question. That should be the Commission posed.
This is a question for all 4 types of countries.
That's a good question, but this is in the air.
So this is a question for
Okay, we'll stop here.
Then we will get more. No.
Right. Well, thank you to the speakers, thank you to the translators, and I will give the floor back to Philippe Arao for the concluding remarks.
Please, a big applause, yes, for our friends. No, stay here. Stay here, Paul, stay here. Just 1 minute. I want to thank you for the 4 of you, because it was really very, very interesting, really. And we can fully understand the difficulty of the topic and fully understand why it has been postponed, because it's not mature enough for coming up. Well, all the position of all of you and from the debates as well clearly show that we still have some work to issue, and it's not finished. We should all of us work on it, each one with his clear will. And what I have appreciated very much during this debate is that we have seen clear European mindsets. The 3 of you, including the moderator, you have clear European mindset with the will to build Europe. And for the last question of our Slovenian friend, there is no answer today, because the will is not only from these people on stage, but as well the will of the political representative of member states. And we know that taxation is not a common policy. There is no will to share that policy at European level. So it's very hard to harmonize taxation. That is a difficulty, because each one is ready to go a step forward, but not 2, just 1. And it's not easy with that in mind to issue to where you would like to go. But, well, we have to find the consensus between all the expectations, and it's not easy. Paul, thank you have been very clear, and we fully understand your political position, because you're a member of the parliament, and you have a lot to do with your committee, and logical that you have a broad view on the topic, and we need that as well. And on the other hand, we understand Andrea with representing the position of the profession and the expectation of the profession, and it's very clear. But we have to find consensus. And it was funny, but the consensus maybe came from the younger on stage. Manon, thank you, because you were wise in your position, and what you proposed was quite was a sort of consensus, looking for a step forward, and then we will see what will be the following one. But this is the way to build Europe, I think. It's a policy of steps. And on that one, we absolutely need to take this first step, but it will not be the final one. And that probably will be the issue of the Commission proposal. Let's start by something, and that Ed Paul was very clear on that. Let's start, and then we will go further. It's probably the only way to go in that direction. So many thanks again. Probably was not easy for you to be the only male on stage, but you did it very well. Thank you. So now, thank you again. We invite you for discussing this debate if you or anything else. In the lobby of the hotel, you have a drink to take, and it will be our pleasure to keep going on that topic. Many thanks.